Hey everyone, welcome back to Corporate Decoder, the place where we, try to make sense of these corporate filings. Get ready, because today's report is all about a company that's been doing a little rearranging, kind of like when you decide to sell your old stuff at a garage sale. We are diving into an 8K filing from XBP Europe Holdings, and trust me, it's more interesting than it sounds. Basically, they're reissuing some old financial reports because they decided to sell off a part of their business. Let's break it down.
This report is dated February 14th, 2025, so it's not exactly hot off the presses, but the information is still important. The company we're talking about is XBP Europe Holdings Inc. They're based in Irving, Texas. XBP Europe Holdings is officially registered in Delaware, which is a popular choice for companies. Delaware is like the Las Vegas of company registration. Lots of companies choose to incorporate there.
Their tax ID number is 85 to 2002-883, just in case you were wondering.
You can reach them at 844-935-2832 if you have any pressing questions for them or just want to say hello. Now here's a fun fact. XBP Europe Holdings is considered an emerging growth company. Think of it like a baby startup, but it is actually a real company. It means they get a little extra time to get used to all the rules and regulations. They have common stock, which is like owning a little piece of the company.
Their stock ticker is XBP, and you can find it on the Nasdaq Global Market.
They also have these things called redeemable warrants. Basically, it's like a coupon that lets you buy more stock at a set price, in this case, $11.50. These warrants trade under the ticker XBPEW on the Nasdaq Capital Market. Alright, let's get to the meat of the matter. Item 8.01 is where things get interesting. So XBP Europe Holdings had this printing business where they printed stuff on demand. But in 2024, they decided to sell it off. It was a big strategic decision, like deciding to focus on selling only shoes instead of shoes and socks.
Because they sold off a chunk of their business, they have to go back and fix up their old financial reports. Think of it like redoing your taxes after you realize you forgot to include some income.
They're reissuing their annual report from 2023, as well as their quarterly reports from March and June of 2024. So these reports are being adjusted to show the printing business as something that's not part of the company anymore. Exhibits 99.1, 99.2, and 99.3 are basically the corrected versions of those financial reports. They're like the after photos in a makeover show. The most important thing to understand is that these updated reports only change how they present the printing business. Everything else stays the same. It's like saying, okay, we sold the printing division, so let's take it out of the overall picture and see what's left. These reports don't cover anything that happened after those dates, like new deals or changes in the market. So, if you want the full story, you need to look at their more recent filings with the SEC. Basically, you should read this report along with all their other filings to get a complete understanding of the company. It's like reading all the chapters in a book instead of just one.
Now, this report is not trying to update anything besides how they show the printing business. So, any information, uncertainties, risks, or events that happened are not covered in this report. For those, you'll need to look at their other reports.
And to see what has happened since the 2023 report, you should check out the company's more recent filings with the SEC.
Now let's talk about item 9.01, which is all about the financial statements and exhibits.
Exhibit 23.1 is the consent of UHY LLP, which is the company's accounting firm. It's basically a document saying that the accountants are okay with including their audit report in this filing. Exhibit 99.1 has the updated versions of the company's 2023 annual report, focusing on management's discussion and analysis of financial results and the actual financial statements. Exhibit 99.2 has the corrected quarterly report for the first quarter of 2024, including the financial statements and management's discussion. Exhibit 99.3 is the same thing, but for the second quarter of 2024.
And Exhibit 104 is the cover page, which is in a special format called Inline XBRL. It's basically a way to make the data easier for computers to read. Finally, we have the signature. Dejan Avramovich, the chief financial officer, signed the report on February 14th, 2025. It's like signing a contract to say that everything in the report is accurate to the best of their knowledge. So, what does all this mean for XBP Europe Holdings? Well, selling off the on-demand printing business suggests the company is focusing its resources on other areas. This could be a good thing if those other areas are more profitable or have better growth potential. It's like deciding to focus on your best-selling product instead of trying to sell everything. But it also means they're losing a source of revenue, so they need to make sure their remaining businesses can make up for that loss. It's a bit like downsizing your house. You save money on bills, but you also have less space. The good news is that reissuing these financial reports helps investors get a clearer picture of the company's financial situation. It's like cleaning up your room so you can actually see what you have. One risk to keep in mind is that the company is still considered an emerging growth company. While this gives them some advantages, it also means they're still relatively new and may not have the same resources as larger, more established companies. Looking at the overall picture, XBP Europe Holdings seems to be in a transitional phase. They're making strategic decisions to focus their business, but they still have some challenges to overcome. Whether the company direction is a good one will only be seen in later reports. As for a stock price outlook, it's tough to say without digging deeper into their financials and future plans. But based on what we've seen here, a neutral stance seems appropriate for now. A reasonable target price range, based on very limited information, might be between $1.50 and $2.50, but that is just based on limited information here. It is important to note that an investment should not be made based on this video alone. Thanks for watching this episode of Corporate Decoder. If you found this helpful, please subscribe, like, and leave a comment. And remember, investing involves risk, so do your own research before making any decisions.